Kevin here, top 100 financial advisor, two-time author, one-time bestseller, and we are here to talk about the stock market. We had some good news today, and it's the third Monday in a row that a company has come out with vaccine news, and that has happened to boost the stock market. I don't know why it's on Mondays. It just happens to be on Monday. So the first Monday we had Pfizer, then the next Monday, I think Moderna was first, then it was Pfizer, and now it's AstraZeneca. So maybe next week we'll get Johnson & Johnson. I don't know. We will find out next week. But anyway, again, this is great news for the stock market. Stock market was up. We'll see what happens the rest of the week. I'm really not overly concerned that what happens the rest of the week because I'm waiting on this turkey. But aside from that, the most important thing is to focus on what's going to happen, or what we expect to happen rather, in 2021. Right now, between the end of November and December, this is your time to plan for the future. You do not wait until 2021 to plan for 2021. You don't wait until April. You don't wait until June. You start to plan that stuff now. And this is a pattern we've talked about before. When I talked about Black Friday stocks, it was what? October. When I talked about stocks for Q4 of this year, I mean, October, November, December, we talked about that at the end of September, maybe October 1. So you need to try to do the best you can to put yourself in position for 2021 right now. Same thing with what I do for my kids and myself. When I'm trying to make sure that my son and daughter are in the best places in 2038, when my son is 18, you got to do that now in 2020 or in 2018 when he was born in that case. So no, you're not going to be perfect. So let's just throw it out there, and you can only predict but so much. In 2019, nobody would have said, well, you need to invest for the pandemic. This is why we make those quarterly adjustments. Is why I make changes every quarter. But if you have the right process, a process that's simple, a process that's easy for you to follow, in some cases, you won't have to change but so much. For example, when you go back and look at our quarterly watch list that we talked about, all I did was switch out Kroger. Kroger's kind of fallen off a little bit. We switched it out. We put in Walmart. We're good. That's it. Everything else stayed the same. If you go all the way back to January, especially, I think this one is especially on my Instagram, I gave people 5 stocks back then in January before the pandemic hit the US. Netflix was on there. Bristol Myers Squibb was on there. BMY. We're good, right? So we didn't have to make too many changes to that list at that point in time. So sometimes it's just, hey, this is happening. We'll just make a small tweak here. We'll make a small tweak here. You should not have to adjust but so much. So for example, or what we're going to talk about today rather, is understanding what we know or what we think we know in 2021 and how do we position ourselves to be in the right places. And then come April, that's 3 months into it. So we're kind of coming into month 4. So March, April-ish of 2021, we can make those small changes after we know what the Biden administration is going to do or how things are going to look at that point in time. But you have to put yourself in position now. You don't want to wait until things are too late. So what we know right now, we know that right now, electric vehicles are probably going to be the thing. That's why NIO is doing so well. You already know about Tesla. We talked about Tesla when it did the stock split earlier in the year and about it being added to the S&P 500. We talked about it early. That's why we put ourselves in position for December back in September or so, right? So same thing now. If you're looking to do something in 2021, you need to be looking and researching and practicing right now. Right now is the time to practice for that stuff. So I got a few charts that we're going to go over and kind of discuss what we expect to happen. One other thing, we talked about the Airbnb IPO. We expect it to happen in some point in December. My best guess right now in November, we'll see how valuable that is. I expect the vaccine to have rolled out and to be mass produced and to hit a good chunk of Americans at some point in mid 2021. When that happens, I expect there to be more bookings. I expect people to travel more. So maybe we'll see Airbnb rise, but I expect to see a rise or a bigger rise rather, in a lot of the airline industry. So American Airlines, Delta, Southwest, a lot of those you should start to see a big boost. A lot of hotel stocks, you should start to see a big boost. Now, I'm not 100% sure and saying like I would go and invest in those right now today. And I want to show you why. I think it makes sense though. I'm not gonna berate you for doing it today as I would have like 2 or 3 or 4 months ago. I'm gonna show you why. So I'm gonna share the screen real quick and show you why I would be okay with investing in it now than what I would be just a few months back. So I'm gonna go here. So this is American Airlines, and let me make this a bit bigger. All right. So as you see, this is American Airlines. This is year to date. So from January to this year. And as you see, all year it's been just falling off the map, and people were buying it at all these points all year long, and it really hadn't been doing anything. At this point, you can see that it's kind of leveled off a bit. At its absolute lowest point was back in May. If you could have somehow magically timed it in May and sold it when things just spiked for whatever reason in June, then you would have been perfect. But again, not everybody knew how to do that. Not everybody could do that because you could not tell the future. No one knew if I buy this in May, it's gonna peak 3 weeks later, and then it's gonna just fall off the map after that. People who bought in June thought that this was it and it was gonna take off, and it did not. You bought in June, you're looking real dumb right now. And that's what happens when you buy low quality stocks. You don't know what's going on. There was no cure. There was nothing special about June 8th. For whatever reason, it popped, and then maybe we got some great news, but it's not the news that we have today. So if you're looking for something for 2021, it seems that this has kind of leveled off a bit, and that maybe this could be the time to get in now and wait for 6 months. Notice I'm setting the expectation that it could be a while. I'm not telling you to jump into something and wait until tomorrow. I'm not telling you to jump into something and by the end of the year that it's going to pop. I'm still a little hesitant, but I think it makes more sense now than what it did in this area back in June. And I think it makes a little more sense now than what it did back in, back in May. All right. So you want to have that in mind, but here's the risk of it. Right now, it makes sense, right? It makes sense to expect an American Airlines or any of these airline companies or hotel companies for that matter. It makes sense at this point in November to get in now. Things are flattened out. We know that there's a vaccine coming. We know there's going to take X amount of time for the vaccine to roll out. Makes sense. Here's the thing though. Back in from 2015 to 2019, let me move this. At this point in time, this was Disney. Disney was rolling out his Marvel Cinematic Universe. They had acquired Star Wars. They had Marvel. They didn't have Disney Plus yet, but they had already acquired a streaming service. This was back when Shondaland was popping. This was back when ESPN was popping. Like they had all the stuff back in 2014, 2015. And even in 2018 and 2019 is when they announced Disney Plus. So even though we expected Disney to do what it is doing now, where since March to now, Disney is on fire. But back in 2014, back in 2015, we expected the same things that we see today in 2020. We expected to see this back in 2014. As you see here, Disney from November 2015 to March 2019 was actually down 10%. And as if you were to just draw a straight line here, even from if you look at the bottom from 2017 to about 2019, it was relatively flat. It hadn't actually did all that much. And what that tells us is that even though on paper it makes sense, it doesn't always translate market-wise. And that's what we saw with Disney. And again, now Disney is great. So if you held for 6 years or if you held for 5 years, then you would have really reaped the benefits of Disney. But not everyone is as patient as that. But also on the flip side of it, from about 2015 to now, Disney's up about 15% over like 5 or 6 years. Do you know what a lot of these other stocks like Netflix, like a Google, like an Amazon, like an Apple have been over those 5 years? We're talking triple digits. So you always want to weigh those things. So here's what we expect, and this is just general consensus from a lot of the experts that you're going to see, a lot of the reports you're going to see, Washington Post, Motley Fool, Yahoo Finance. So you may, and these are all conjecture right now, you obviously want to do your research. We would expect to see a large rise in hotels and airline companies between now and around now to mid 2021. We'd expect to see that now. It did make sense 6 months ago. It makes more sense now than what it did then. Context is important. Most people feel, or most of these reports are kind of hinting towards these stay-at-home companies, Zoom, Netflix, to a degree Amazon, but I don't really agree there. that those are going to fall off because as people, in theory, as people start to go more outside, that they're going to use Zoom, even Disney Plus to a degree. They're going to start using those services a lot less. They're going to cancel a lot of those, cut the cable, and say, look, I'm going outside. I'm going on vacation. I'm not going to sit home and watch TV. I'm not going to do these Zoom meetings anymore. I want to go to this conference in person. That's the expectation. So they would tell you that they would probably sell out of those, buy more travel. That's what most people are looking at. Personally, I think that a stock, I can understand and see why a Netflix could fall. And you ain't get me off of Amazon. People are going to order Amazon in whatever which way, holiday spending. If you ain't doing it this year, you're doing it next year. And plus, Amazon's got all types of stuff. Their Amazon Web Services. I don't like to call anything invincible, but that's as close as you can get. Stocks like Apple, it's been up and down, especially in October. I'm snapping that up as usual. I'm going to continue the course there. I obviously think that Walmart is going to be good both now and relatively in the future. So that's how I see it right now. We will see what happens with the electric vehicles. I am pretty big in that space in the form of Tesla. NIO is looking good. That's NIO is a Chinese company that hadn't done much of anything last year, but it's up like 1,500% over the last 1 year. Anything that's that hot, you always kind of give a side eye, but it's something to give an eye to, and it's something to pay attention to. We had mentioned Scott's Miracle Growth in terms of the cannabis sector and where that could go. I'm not really sure about Aurora Cannabis and the others. Canopy Growth Company was another one, but yeah, watch for it. I'm not really high into that. That's funny. But watch for it. But I think Scott's Miracle Grows is more the play there. So those are a few of the ones that I am going to look into. I'm still going to look into tech. I might look into a little more healthcare. United Healthcare would be one of those. And we'll see. Information and things are going to change between now, the end of November, and the end of December. We'll likely revisit this and kind of take all the information that we know at that point and then really take a deeper dive. Those who are in the Investors Toolkit, which you should be a part of, you guys will get a brand new watch list for December. So after this weekend, it's actually our anniversary, our 5-year anniversary, marriage anniversary, wedding anniversary, marriage anniversary, same thing. Same. I'm 90% sure it's the same thing. Once that's all over on the 28th, then I'll sit down and revamp the list for December. And what I do with that list is anytime I I'm creating those lists, I'm saying, with what we know now, what do we project, what do we think of the next 6 months? So we'll have an even better picture then. All right, that is it for me. I will talk to y'all later. Make sure you hit the like, subscribe button. Make sure you hit the share button, and make sure you check out the Investors Toolkit. It's a very, very easy to understand investing course that sets you up for the future and helps you create generational wealth. The link is above. It's buildingbread.com/tools. Talk to you later.